Welcome to this video today, which is all about Forex trading strategy, and I just want to go into how profitable and effective it is. It's a question I'm frequently asked. Strategy in question is the Forex London Open Breakout strategy. I've seen this strategy promoted by numerous people, also Forex brokers as well. It's a great way to make money from the markets. Now, is it effective? My answer is I'd be very weary of this trading strategy. Why? The logic is just totally flawed. I'll go through the logic and why it's flawed in a moment. Now, in terms of people promoting the strategy, say it's got a good win rate, high probability of success, good risk to reward, and you will see hypothetical track records, and you will see people going backwards on a chart and basically telling you what they would have done, which of course they didn't. There's no evidence that I've seen anyone using this strategy who produces any real-time profits, like an audited track record, or does a trade in actual real time. Now, the strategy itself does appeal to beginners in particular. Beginners just want a set strategy that they can use, which is simple, which it is, which is going to give them a high probability of success, with kind of minimum effort and kind of a rigid trading strategy. Now, in terms of the strategy, why won't it work? Well, logic is based upon that, London is the busiest, trading period, which it is, okay? A London Open has got particularly high volume. Now, in relation to this, the logic is that basically that is great for intraday traders because of the liquidity, okay? So you can trade with very tight stops, good profit potential. Now, the first thing to be aware of with these strategies is they normally are promoted in terms of using a 1 minute chart to the longest period being an hourly chart. Well, that's your first warning sign. How on earth can you get the odds on your side when you're trading a minute chart or 5 minute chart? You're just trading random market noise. It's only going to look orderly when you go backwards. It's not going to be orderly when you go forwards, is it? Now, in terms of the other logic the strategy is based upon is that you can get clues to what's going to happen in the London session from what happened in the Asian session. Well, if you do a statistical test on this, there is no correlation whatsoever that's going to give you a high level of probability, okay? Whichever way you do it, what happens in the Asian session is not going to reflect necessarily what happens in the London session. That is, pretty, or should be pretty obvious, but it isn't to a lot of traders. Now, in terms of why this is not so, you've got to think of what big institutions, really big players are doing. This is hedge funds, banks, commercial hedgers. They're not looking at the London Open necessarily to trade it. They want to trade off big support and resistance levels. They're going to trade off them in whatever time period the levels are breached or touched, okay? Also, what they're going to be looking out for is news events and positioning themselves, for important breaking news or what has happened in the global economy. Again, that goes over time sessions. So, there isn't a set correlation between the Asian session and the London session, which you can trade with a high degree of probability. Then you've got the fact that you're trying to scalp small profits in the noise. And if you look at some of these strategies, they're not looking for many pips, okay? They're looking for maybe 10 to 100 pips, okay? Well, you've got to use a stop. Now, what's the range of an average currency pair? Well, that's 100 pips in a day. So, how are you going to win? You might get a few small regular profits, but at the end of the day, if you don't use a stop loss of 100 pips, you're going to get stopped out more times than you win. If you do use a stop loss, let's say of 100 pips, what's going to happen? You might have 4 winners, at 20 pips or whatever, 1 loss at 100, your profit's gone. I think in terms of Forex trading, if you want a strategy that's going to win, you've got to base it on how Forex prices really move. The strategy is too simplistic. It's based on flawed logic, and it has no, or I've never seen it, an audited track record to back it up to show that it works. Anything's easy in hindsight. When you're trading the market's got to trade it going forwards, not going backwards. That's a little bit more difficult. But if you want a simple strategy, anyone can learn one of those, and anyone can basically make money. But focus on the longer term time frames and study how the markets really work. Stay away from short-term trading and this idea that trading sessions, the Asian to the London, how the Asian is trading will influence the London with a high degree of probability in a short time frame. Just simply isn't true. So I would look for other trading strategies, as you can gather. Thank you very much for watching me as usual. Take care. Have a good day.